Are you ready to crush 2024 with your own real estate portfolio? Hey, I'm Jason Balin from Hard Money Bankers. This is Ian Horowitz from Equity Warehouse. If this is your first time tuning in to the Real Estate Reserve podcast, welcome. I promise you, you're going to have a lot of fun with us along the way, and you're going to get some good tips and tricks. I promise you that as well. If you're a regular viewer, subscriber, listener, follower, thank you so much. We certainly appreciate all the support that you've given us. Today, Ian and I are going to talk about how to crush your 2024 with your own real estate portfolio. But first, as a real estate investor, entrepreneur, business owner, anybody, you got to figure out what you want in 2024. I challenge you to start with that. I challenge you to start with your goals, with the end in mind. Figure out where you want to be at the end of 2024 and then work backwards, because January 1st is creeping up and we want to get going on the right foot. Maybe January 2nd, right? Maybe start January 2nd, not January 1st, but that's okay. And then you got 365 days to go out there and absolutely crush it.
Yeah, I think you need to be starting right now. The second you watch this video, the second you hear it, is your mind already starting to race? Or are you starting to say, oh my God, what should I do for 2024? What happened in 2023? How can I correct quicker and be ready to dominate this market, right? I know it's very easy for us to jump in and talk about the markets, and we're going to get there in a minute because that's what I think we need to discuss. But Jason's absolutely 100% right. You need to identify what you want. You need to identify what works for you, what works well for you, what doesn't work well for you. If you're in real estate, okay, let's use the 80-20 rule. Let's start talking about what stuff is operational drag and drop it off your portfolio. If you want to get in real estate, what's your best resource that you have? Is it capital? Is it marketing? Is it time? Is it a network of people that allow you to get in there and be able to put money into other people's deals? Whatever it is, identify what you want to be really good at for 2024, and your portfolio will do nothing but grow in that year, and honestly for the future going forward. It's the same common theme that you can utilize over and over and over and over again.
Yeah, we're going to dive into, potentially helping with capital, deals, resources, the educational part, but there's no better way to start than goal setting, right? That's just 101. My business partner, Chris, and I learned this from a business coach that we had maybe a decade ago, maybe 10 years ago. And it's one of those things that when you write down your goal, they turn into reality, like every time. It's like the closest thing to magic that I've ever found is when you literally put your goals on paper. You think about your goals first of really where you want to be, like really where you want to be, not just like, hey, I want to own 100 properties. Why do you want to own 100 properties? Or, hey, I want to own $50 million in real estate. Why do you want to have $50 million in real estate? You might, only want $500 in passive cash flow to supplement your income, or a few $1,000s a month, whatever it is, right? There's no right or wrong. Nobody can tell you what you want. The point is to understanding it and figuring it out. And it takes time, right? You have to, in essence, like, daydream and think of like what you really want. And guess what? You can't have a wrong answer, because if you have the wrong answer and you decide you don't want that, well, the good news is you just change your goals. It's very, very simple. You can change your goals. I change my goals on a regular basis. I'm sure Ian changes his goals on a regular basis. But, in essence, you create this big, audacious goal down the road, 20 years, 30 years, whatever you want down the road. And it can be freaking ridiculous. And it can have as many zeros behind it as it wants. You can have as many units, tenants, properties, whatever you want. You can have as many as you want, but behind that, you do something crazy, and then you work your way backwards to determine what has to happen tomorrow, right? So let's say, hey, I want to have a $10 million real estate portfolio in 20 years from now, whatever, figure out where you'll be if that's what you want, right? Let's say you want that, right? Cool. Well, where do I need to be in half of that much time? So when we did our goal setting, let's take out 20 years, right? Because 20 years is hard to fathom sometimes. Let's take about 5 years from now, right? Because 5 years is something that is a little bit easier to digest. So you take it, you do your 5-year goal, and you back that out to 2.5 years, right? And then you go to a little over a year from now. Then you go from 6 months from now, 3 months from now, 1.5 months from now, 1 month from now, 2.5 weeks from now. Yet, what needs to be done tomorrow, right? And it's crazy, because let's say you have to have like a certain amount of seller appointments. Let's say you're, trying to be a wholesaler, or you're trying to flip properties, whatever. You want a certain amount of marketing deal flow. Like, if you look at it in a 5-year time, you might need like 1,000 leads, right? Or 10,000, seller appointments. But when you back that out to where do I need to be tomorrow or next week or next month, it might only be like 3 or 4 or 5. So you take a humongous chunk, right? Something humongous, and then you make it significantly more digestible. So really, these are the few key things I need to do day by day by day by day.
Yeah, and my goal for 2024 is to make sure we say this in every episode. If you guys get value, if you're enjoying this, if you think someone else needs to hear this, please like, subscribe, share this with your friends and family, because you know what? We don't make any money on these podcasts. We literally just get on here and talk about what we talk about every single day on our phone calls with each other. So please share it if you can. But goal setting is super important. I remember when we first started, it was, hey, my goal is to get, $1,000 a month, then it's $2,000 a month, and it was $5,000 a month, right? And the goal just started to snowball slowly but surely. And it was building the goal, taking the action, realizing you're hitting the goal, and going and readjusting your goals. Too many people get to the mountaintop and then there's a cliff on the other side. They're like, oh, I don't know what to do now. And they go and they start exploring life or time or something else that's non-revenue producing. And then all of a sudden they realize that inflation and life catches up with them, and they're like, oh crap, I need to go out and work again. As you build your goals, you should have life goals, you should have business goals, you should have family goals, you should have fun time goals, whatever they are. There's a different goal for you should have a goal sheet for each facet of your life. And well, I'm not the expert on that. There are plenty good apps and plenty good people that talk about the few sections of life that you should break your stuff down into and create goals around them. So it's easy to crush 2024. I promise you guys, we're getting into the market here in a second, but you cannot talk about how to grow yourself for your next year if you don't work on these exact things.
Exactly. And like here's the thing. So the 4 domains that I had inside mine when I do goal setting is family, personal, so family stuff, personal stuff, then personal finance stuff, and then business. Right? Those are the 4 domains, and then inside your domains you have key levels. And I think a lot of people don't do them because number one, they're scared, or it becomes very anxiety driven, right? Like I remember when I was trying to start in real estate, years ago and start a lending company, like I had a lot of anxiety on it because it was overwhelming. It was like, I want to get to here. Like I want to get to this top of the mountain, but that top of the mountain was so far away. But it's one of those things that you take those steps every day and you get bigger and bigger and bigger. And then you look down and all of a sudden you're like, holy crap, like I've come very far. So like related to 2024 in general, we're at a really interesting time because I truly believe that there's going to be a lot of opportunities to potentially buy properties or take over properties, buy notes or take over existing notes, just buying assets in general. Like, I don't know if certain asset classes like single family homes or office or stuff like that are going to completely reset in 2024. When I say reset, like literally like crash, like what's bottom bargain basement prices. But like there's indicators that some asset classes may happen. And I think if you're well positioned right now and you have liquidity and you have the knowledge and you have kind of like a sphere of what's the word, like a sphere of other like-minded people around you,
Sphere of influence.
Yeah, you can be advantageous on some of these things. Early on, and this was pre Ian being in this business, like 07, or I was in the business, but I was too early on in it, right? So I didn't have enough experience, I didn't have enough personal capital, I didn't have enough resources to take advantage of the market, when it occurred there. And I know that all markets cycles, even though they're similar, they're also very, very different, and they're hard to predict. So like I remember then I was like, well, I'm not going to buy this property. It's going to continue to go down in price, and then continue to go down in price, continue to go down in price, right? Because prices were going up, and then all of a sudden, it's funny when prices continue to go up, everyone's like, oh, I want to buy, I want to buy, I want to buy, I want to buy, right? Because there's FOMO that just like what happened with Bitcoin, and now what's happening back with some crypto stuff as we speak right now. I want to buy, right? Which as it continues to go up, people want to buy because they want to do that they want to kind of follow that. But then on the other side, when things continue to go down, they're like, I don't want to buy. I'm too scared to buy, right? Because they think it's going to be worth less later. But like that's typically not the case, right?
Yeah.
So I think there's going to be a lot of opportunities here coming, and we can already see the opportunities as we're ending 2023, right? There's there's certainly less liquidity in the market right now, so that's driving some asset class prices down, some significantly, some not all that much, and in general, deals that I've seen come across my plate, or deals that Ian has seen come across his plate, or deals that we might not have seen over the last few years.
Yep. And I'm even getting deals that I offered on a deal and they came back unsolicited for $150,000 less than my original offer price without me even saying, hey, do they still want to sell? So that's a telling time of what's going on. Now, what do I really think is going to happen? With price adjustments and all that, nobody can be predictable. If we did, we'd all be on a private island somewhere. What I do think there is that a lot of people aren't talking about is pent up demand. There's a lot of shops out there. They make money on acquisition fees. They make money when they buy new deals, through construction management fees and all this other stuff, in the commercial space anyway. I believe there's a lot of pent up demand that's going to be coming to the table. You got what's his name from the Fed saying he's going to drop rates 4 times next year. I don't know how much of that's news articles, politically motivated, or anything in between. If there is some rate drops, I do know the 10-year treasury is starting to stabilize out. It's starting to come down. All the markets really want is stability. We don't want the ups and downs. We want the stability. We want to know that when we go get quoted on a debt price at, let's just say it's 7%. Who cares? I know that when I'm doing a deal, that 7% is going to be good my whole entire time of the deal. I don't want to get to the closing table like, oh, basis points, move by 50 or 100 basis points by the time I closed within 90 days. It's just like, that's crazy. Most real estate investors want the stability. And I think we're going to get some of that stability and some retraction. And I think there's some pent up demand out there. I think the single family space, the homeowners are ones that are going to feel it the most. However, jobs, divorce, death, all those things that normally come into play are still going to consistently move the market. You guys got to remember, Jason was in the market in 07 and 08, but that was an inherently structural issue. Like now it's just, it's people's liquidity and the ability to pay. I'm sure bad loans are still getting done, but there was an inherent issue there that caused the breakdown of the market. This time, it's really just illiquidity or too cheap of debt that creates massive velocity, and you're starting to see that. It's like a heart racing, right? Like really fast, then it's slow. Really fast, then it's slow. We all just want that nice, consistent heartbeat and stability, and be able to go out and do deals.
Yeah, and I think a lot of people will attest to, like, they don't want this. They don't want, the constant going up, going up, going up, because there's that fear that the more elevated and escalated that is, the bigger chance it's going to drop like this. And it's hard to tell, what side of that cycle you're on. That being said, it like Ian said, related to the consistency. If you're underwriting a deal based on the info that you have today, and it's got good fundamentals and it's a good deal in general, the goal is just stay like this, right? Stay flat forever. If you get appreciation, that's great. And guess what? Even if that thing depreciates, as long as you have the right debt in place, and as long as you have the right tenant structure and cost overruns, and you have the right, delinquency rate and vacancy rate built into your pro formas. And again, this could be for multifamily, single family, commercial assets, then it's okay. All of that stuff doesn't really matter as long as you take that into account. I know most residential real estate investors that own, a few properties, in essence, there's more inherent risk on that, right? Because if you lose one tenant on one rental property and that's all you have, you're 100% out. So that makes it a little bit more challenging. And that's why I think a lot of real estate investors eventually gravitate from the single family world to the multifamily world, maybe even into the commercial world, to try to reduce your risk of having more and more and more and more units. That's not to say that, you can't be successful with just, 1 or 2 or 3 and self-managing and things like that. Again, it has to do with what you want. The one thing that I do really like about being a small operator or, you know, running a smaller business in general is, and not kind of Wall Street driven, or not having an institutional or investor capital driven, is, you know, even though market changes affect all of us, they don't affect us to that degree because we're localized. We control the capital that we've all brought in, our, you know, through private capital or sources that we have. You can pivot on a dime. You can determine and change things up in your business plan as needed. You know, some of these huge institutional market movers that own skyscrapers and gigantic uh, properties, or they own, you know, hundreds of thousands of dollars of hundreds of thousands of single family units across the country, like that is just macro driven, right? There's a increase or decrease in cap rate, and they're affected at once. You know, recently I was talking to an investor, and they're like, "Are you still lending on office?" And I was like, "Sure, I'll lend on office buildings. I'm not lending on skyscrapers. I'm not lending on gigantic, huge office parks, but I'll lend on, you know, a single office building or a single office unit to a, you know, a few dozen units locally, because I can control that better, right? I can determine how I want to structure it later. I can do individual workouts if we need to. I have a lot more flexibility on a smaller scale. So a lot of things that are kind of news driven that you hear, see, again, those are all things to take in consideration. But when you're owner operating your real estate portfolio, and you're putting the right people in place, and you're controlling your capital stack, and, you know, you're educating yourself the right way, you know, you can still be successful no matter what. You know, even if the sky is falling, you can still, you know, put up your hand and in essence block it from coming down on you.
Yeah, I think that's right. And I think a point that comes to mind for me is having liquidity, right? I think lenders in 2024 are going to continue to reduce leverage points, right? And that's going to require some more liquidity. You know, so if you looked at the end of 2023, it's harder and harder to get deals done. Well, if you don't have liquidity, how can you create liquidity? You can create it through the sale of your properties. Might be able to do it through refinances, but another thing you might want to look at is how to raise capital, right? As you know, people are more in tune now. They're like, you know, what's funny is like it's almost like the FOMO game. It's kind of weird, but like, you know, maybe a FOMO game is not the right way to compare it to, but a bunch of my friends, they're like, yo, I'm getting 4.5% on my savings account. And a couple of them are on my email distribution list. And I was like, hey, we're offering 8 to 9% on one of our upcoming deals. And everybody's like, really? I'd rather go get that. It's like they're almost in tune. Whereas like when it was like 1%, people were like, that 9% stuff's a farce. There's no way. You know, so I think now is a great time to have the conversation with your friends and family. You know, you can't do that unless you go out and do a deal. I would say that you need to go swing the bat first on your own. But once you're swinging the bat, I think it's going to be really easy, not really easy, but it's going to be easier to have those conversations around it. Because I think more people are in tune with the weird stuff that goes on behind closed doors with banks and what's really available to us. Social media is probably one of the worst things that has ever happened to society. It has made a lot more things transparent. You know, look, I understand there's a lot of bad things that surround it, but if you look at social media for the good side of it, I think it's great that people are having conversations around, I can get 4.5% here, or I can get 9% with one of my friends who does real estate. And here's all the advantages to that, having those real conversations about that. So that's been fun. And I think that's something, if you're looking into 2024, is having the liquidity on hand to be able to do deals is going to be really important.
Yeah, no doubt. I 100%, you know, figure out ways that you can, in essence, do that. Damn, there was one other point that I was going to state that you said. We can get on we can continue to talk about the capital side, because I think that's an important side.
Yeah, I was just saying that, you know, make sure you have liquidity. And, you know, the point is that people are seeing better bank rates. That's, you know, making your deals almost look more credible, right?
Yeah, no doubt. And also, like, when Ian's talking about like 4% in your savings account or 9% with a private note, like, let's be honest. If you're a passive capital, that's passive investing. Like, you're doing nothing, right? Like, if you're looking to create good returns on your money, you have to be an active investor, and you should be, you know, achieving 100% on your capital, or, you know, double digits, 20, 30, 40, 50, you know, a very high amount. I'm talking about passive, and there is a huge difference between passive income and active income. if you want a good book, kind of that will dig deep in you is Millionaire Fast Lane Millionaire.
Mm-hmm.
JD DeMarco or JR DeMarco, something like that. I don't remember his name. But anyways, that's just what it is. Like when I'm operating my business and I'm using, capital inside of our business, or I'm using my own capital inside of our business, right? You should be able to lever that up at a very high degree. Like think about it. Let's say you buy a property we'll keep it numbers really simple. You buy a property for $100,000, and you get a hard money loan or a bank loan or a private loan, and you need to put up, like, let's say 20,000 of your own money, right? You put up $20,000 of your own money. You're buying a property for 100 grand, and you flip that property and make, 40 grand. Say you flip the property, make 40 grand. You're making 2x. You're making 200% on your capital. That's the type of returns that an active investor should be getting, right? Sometimes you're putting up no capital, you get an infinite rate of return. So, like your example of the 4 or 9%, I agree. But like that's passive. Like that is passive income. Like on my passive income, I try to achieve, double digit interest rate returns, if not higher, on my passive stuff. Like I try to achieve, typically like a 14.5% return passively. And if I do, that means I'm doubling my money every 5 years, right? The same amount of money, rule of 72. You take the interest rate, you divide it by 72, your interest rate of return divided by 72. It tells you how long you're going to double your money. So for instance, if you get a 7.2% interest rate on something, every 10 years, you're going to double that money. So I try to do a 14.5% return passively. Actively hit that out of the parks. But it's something in context, right? If you have a full-time job and, you're not looking to invest in real estate and you just want to be, a limited partner, maybe you want to get into syndications, maybe you want to be a note investor, things like that. You still, be able to achieve, a decent rate of return. But the more you are actively, the higher the return is going to be. So keep that in mind, because that's a big thing to think about.
But that also goes back to the very first statement you made is know what you want to do. You might have a great paying W-2 job that you love, or you own a business that you love, and you're like, oh, I need to get in real estate. A friend of mine, he owns a flooring company. They do several $1,000,000 a year, maybe tens of millions of dollars a year. And he's always like, oh, I want more real estate. I want more real estate, but he can't operate it because he's running his operating business. So he places a couple $100,000 at a time with us to get into the deals, right? Because that's the best way for him to diversify his portfolio away from his business, start building a big passive revenue stream that then allows him to eventually get out and sell his business and still have income coming into him because he's putting money into our deals, and the cycle begins, right? So none of us are saying, hey, just jump out and you have to go operate real estate. No one's saying that you can only passively invest. You do whatever you want. In the end, know what you want to do. And just as a frame of reference, this is the book that Jason was talking about. He got all the letters right, just in the wrong order. It's MJ DeMarco, The Millionaire Fast Lane. If I remember correctly, it was a pretty easy listen. And it's really just simple points that come out. And it's like, man, that's good. 2024, stick it on your read list. I think it's a really good book. Kind of sums up of like, hey, you want to be you can see my girl's Christmas gifts. Hopefully they don't look. If you want to make money quick, let's go. You can do it. If you don't, there's many ways to break down how you're going to earn income for yourself. So
No doubt. I forgot I had the pop-ups of all these videos, because if you didn't watch a video before, we'll put it in the show links. But Ian and I did a video on the 5 best business books, and that was one of them, The Millionaire Fast Lane. And a lot of people might disagree with this. They might think like it's cheesy title and things like that. But
that's exactly what I thought the first time I listened to it. And I was like, oh, you know
too.
what? That was a fun, easy listen, and
Yeah.
like another one, we did a whole episode on this, but like Psychology Money, same thing. Don't judge a book by its cover. Like, oh, I already know what it's going to say. And you're like, oh shit, that was good. Like, it was good to hear the stuff again. But then again, 2024, maybe that's a goal that you're going to set for yourself, is go out and listen to a book a month. Like I've been reading a physical book on my, at night. It's literally taking me, I'm probably working on 6 months on this damn book, and it's not that big. It's, The Body Keeps a Score.
Okay.
And
you keep falling asleep.
no, just I read a page. I read 2 pages. I don't sit down like, yo, I got to read 20 pages. Some nights I'm into it and I go, and other nights I'm just like, yeah, whatever. It's a page.
Oh,
And
I can't read a physical book. I wish I
well,
could.
that was
I
the
don't have the
challenge,
patience.
though. That was the
But I can
challenge. It was like,
bang out
I'm
some
not
audiobooks.
I know, but that was the challenge for me. I was like, you know what? I could get this on audio and I could just cruise through it, or I'm really going to challenge myself because I don't ever concentrate long enough on one thing. Let me get through this book physically. And it's been a hell of a challenge because I'm not a good reader. Sometimes I go back and reread the pages because I just didn't comprehend anything. And
Me
it's a
too.
very technical book that makes it hard, you know?
Yeah,
So,
me too. But at least you know what it is, and you don't just give up on reading because that didn't work, right? Like,
yeah.
hey, if you hate reading, figure out audio. If you still hate reading and you don't do that, maybe you can get somebody to sit next to you and read you a book, like like your parents potentially did as a kid,
Yeah.
or teachers do. Like
Yep.
you figure out what you got to do to absorb the information. I think that's a crucial part. And I'll tell you, like pre-Audible and pre-audiobooks, it's funny because like I used to buy a lot of courses between 2000 and like 2003 and probably like 2006, when I was getting into real estate heavy. I would go to a lot of boot camps, I'd go to a lot of events, seminars, and I'd buy courses from people. And like those courses, I couldn't read like a paperback book on the topic, but I could read those courses. That it was just the way that they were outlined. They were able to. It wasn't meant to be like a book. It was outlines, bullet points, pictures, things like that. So I was able to resonate with it a lot different. So again, for each their own. It's however you set it up. What else we got on the agenda for today, Ian?
I don't know, man. I just think everyone should go crush 2024, and I would not wait for it. This video is coming out, a few weeks prior to January 1st. Go do it today, man. Just go do it. Don't fucking wait. Just do not wait. Too many people are like, oh, well, next year I'm waiting for this. I'm waiting for that. I'm waiting. This has got to be right. Oh, the market's going to come down. Who cares? Like, who cares? The one thing, and Jason started to allude to this, and this is kind of the point that I was taking away from it, is the following, is that the time is always now. And what do they say? The worst day to invest was yesterday, or whatever the saying is. Like, you missed.
Planting trees.
Yeah, you could have done it yesterday.
The best. The best time to plant a tree was yesterday. The second best time to plant a tree is today.
Exactly. And you need to get out there, and you're going to get cost-based averaging. Some of the stuff you're buying today is not winners. They just aren't. It's hard to be with the current financial environment, right? But if you can survive in today's environment, you can survive in tomorrow's environment.
But they don't. It's not like it's, hey, go buy a sucker deal. You don't, like, there's still good opportunities, and it might, like, I think it's like this. Like, we went on a straight hockey stick run, right? You buy a property for over market value, it was selling for higher than that over time, right? Chances are that's not going to happen. Although, who knows? Years from now, it might, right? You buy something today and it'll continue to appreciate. But like we talked about, you underwrite those deals based on the info you have today. And if the deal works, great. If it doesn't, it doesn't. And you got to learn how to find these deals. You're not just going to go sit on MLS and try to, not that there's no deals on MLS, but before you could just go, hey, real estate agent, send me a deal. Great. This looks like a good one. And it would appreciate value. Like, if you talk to old school real estate investors, like real estate investors or commercial property owners, how do they buy properties? They buy properties through relationships with brokers, or other folks that they have, other wholesalers, things like that. They buy properties by going direct to the seller with door knocking, bandit signs, direct mail, outbound phone calls, outbound text messages, figuring out ways to jump in front of their target audience on digital marketing with paid ads, TV ads, radio ads, right? They're doing, meeting people at meetup groups, online, and offline types of things. There's endless ways to do so. It's just a matter of like picking something that works for you and going for it. If you're flush with cash but not time, throw money at it. If you're flush with time with no cash, you better get off your couch and start working hard to do so.
Yep, you got to work harder than everybody else. We didn't earn gray hairs by not busting our ass. So, what else you got for 2024? I mean, my point, as I always summarize, is go swing the bat. If you're not doing it today, go do it. If you're already swinging the bat, now it's time to try to get a double, a triple, a home run, or just keep getting singles. Just keep doing what you're doing. Continue to swing the bat. Do not stop. Do not stop, because eventually you're going to swing one time and you're going to get that home run. What do you want to leave everyone with? How to crush?
Usually when I, an easy way for me to digest, because again, like I get anxiety if I try to just think too big on stuff. I just do. Like I gotta break it down into something a lot more achievable. But in essence, I'll usually put like one really big goal in place and then 4 quarterly goals in place that are a little bit smaller. And then, in essence, try to get to that, right? Like I'll give you an example. Like a big goal per year could be like, hey, I want to set up a new office, right? Like that's a big goal. A quarterly goal might be like, hey, I want to dabble and, do a deal in this particular state and see if this is a market that I want to be in, or I want to expand, this marketing channel, or I want to do this, or I want to do that. Right. So like all of a sudden, those are 5 pretty decent size things. And then, you break that down from like, 5 goals that are pretty achievable, not just achievable, but like pretty decent in size. And then you work your way backwards, right? It could be like, hey, I want to buy, 1 property per quarter, plus I want to buy a multifamily property at some point this year, right? And then at the end of every year, hey, you have 1 apartment building and 4 new single families. If you choose to achieve that, right? That might be too small for you. You might be like, hey, I'm doing 100 deals a month and I want to continue to do 100 deals a month. So that, that might be too big. That might be too small. Your big thing might be like, hey, I want to find 1 private lender who's willing to lend me $200,000. That's my big goal for the whole year. If that's what you want, that might be somebody's goal for a day. So again, it just depends on what you want and how, you have how you set it up, because anything's doable. And our motto with a lot of stuff, and you might not agree with this, but like, we're pretty much just slow and steady wins the race. That's how I've always felt, is we just want to be slow and steady in our business. Potentially, it's great to have, huge wins. But, when you're slow and steady, you might not have huge wins, but you also might not have huge losses. And that's important for me. There's risk factors, risk mitigating along the same ways. So like, I just want to go like this, be a little bit higher year after year, a little bit more than I was the year before, a little bit more the year before, a little bit more the year before. And then when you look back, years down the road, you're like, I've accomplished a lot. I'd much rather do this than do this.
Yep,
right?
100%.
For me, that's my risk tolerance.
I do not disagree 100%. So, I mean, I'm excited for 2024. I'm excited, taking action. I mean, Jason knows my plan, and we'll do a case study on it as it continues to unfold. But he knows my operation code name that I'm working on. And I'm excited. We started taking action on that. We knew that if we wanted that to happen in 24, I needed to start doing that in September. So we've been working on that since basically the end of summer, early fall. Hey, here's my goal for 2024. Here's why. This is what I need to do to have that run up to complete this goal in 2024. And I hate to be secretive, but you guys will find out about it, because we'll do some case studies on what we're executing. Those that are investors in some of our deals are kind of aware of what's going on. So super excited to release that. And I just think, as always, this could say 2025, 26, 27, any year in the future, we would probably have this almost similar conversation, with the exception of where the status of the market is. I can almost bet you guys, and we should stamp this episode and do it again next year, that most likely this episode will sound almost eerily the same. I'm sure if we look in our past history, it's eerily the same of what it takes to get involved in real estate and how to crush your goals for the upcoming year. So totally excited, and look forward to sharing our experiences with everybody that's listening.
We appreciate you guys listening. We appreciate you watching. If you can do us a huge favor, smash that like button, smash that subscribe button, and we'll see you next week on the Real Estate Reserve Podcast.
Thanks for tuning in to the Real Estate Reserve Podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.